to me a little bit about the more kind of complicated estate planning opportunities for IPPs for family business?
Yes. Estate planning opportunities are very interesting when it comes to IPPs. And I'm going to go to two levels, a sort of an introductory level and then a much higher level. So the introductory level is to do what we call named beneficiaries. And
Mhm.
so what is very interesting about named beneficiaries is that the taxation of death benefits happens at the beneficiary level and not at the deceased annuitant's level. So this is very different from an RSP, where at the RSP, the deceased annuitant first pays a tax, and because a lot of things mature, on death and stuff like that,
Mhm.
chances are that the marginal tax rate on any RSP assets will be at a very high level. Here, if you go to named beneficiaries, what you're doing is you're actually forcing the taxation at the beneficiary level. And so imagine, like $1 million IPP trust where the benefit is going to 4 or 6 or 8 grandchildren. And if they don't have any income, then basically the overall tax burden is going to be much lower. So this is what we're seeing is very popular these days, is that IPP members are bypassing their immediate children and starting to pass assets and part of their inheritance to their grandchildren in a very tax effective way.
And
A
how do
much
the
more
monies get received again from this IPP going either to generation two or generation three? Does it come in
Yes.
the form of a registered deposit or does it come in the form of cash?
It comes in the form of cash. So what happens is that there's a tax withholding amount that's withheld, and then the rest is basically assets that are going to be taxed at that beneficiary's level. So it's like adding income to their to that year,
Right.
and whatever their net taxable rate is, that's the tax that they pay. So again, to use an example, if you have $1 million, if you have 5 grandchildren, each grandchild receives $200,000. The average tax rate would probably be in the 30% rate or something like that, versus if it was with the deceased annuitant, it would be at the 50% level. So you've
Mhm.
just saved 20% tax by making sure that it goes to appropriate beneficiaries. And then the other advantages of named beneficiaries is that it bypasses probate. And what is also very important is when we work together
Mhm.
as the actuary's investment manager, a lot of times these death benefits can be provided very quickly, typically within 30 days and often even quicker than that. And
Yeah.
so the family of deceased have assets very quickly, bypasses probate, bypasses those taxes, but more than anything, it's the speed at which they receive the money. So that's what I would call an introductory estate planning opportunity. A much more advanced estate planning opportunity is if there is a family business, and if it is possible to substantiate income to the children within the business, and then have them become members of the pension plan. So in this case, what you would have is you would have the first generation, let's say the parents
Mhm.
being in the IPP, and then you have the second generation, the children. So if something ever happened to the parents and they have a large amount of IPP assets that they've accrued, let's say several $1 million, if they would have, if something happened to them, they were in a common carrier accident or something like that,
Mhm.
because there are additional active members of the plan, the plan doesn't have to be wound up, and those assets, surplus assets, will be for the benefit of the remaining children. And
Hmm.
so the children don't have to actually take out any money until they actually turn 71. So this will allow for tax deferred accumulation of assets, which can be very significant. Imagine a 20-year-old doesn't
Yeah.
have to pay tax to 71. That would be, something that's very good. But if there is a requirement for income, that we can accomplish that by paying surplus assets.
Yeah. What a
To the
fantastic
beneficiaries.
way to defer income and defer wealth into
Yeah,
generation two and three
and three.
for family
Yeah,
businesses. It's amazing, right?
it's an
I,
amazing, yeah,
yeah,
amazing.
I don't think a lot of people know about this. Hopefully, a
Yeah,
video like this can get the word out to the family business market to educate them on this
yeah.
opportunity.
Yeah, I would say that right now, Marshall, that the estate planning opportunities that are available with an IPP is one of the drivers for the renewed interest in IPPs.
Mm,
Because there are very significant advantages. Like, I mean, even in the first example of named beneficiaries,
right.
there could be a 20% difference, easily in the amount of assets that are being provided to the named beneficiaries versus the taxation on the death of the primary member. So
All
this
right.
is nothing to sneeze at.
Yeah.